Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, April 29th, and it's around 4:30 New York time. So starting tomorrow, we really get into the heart of economic data this week, and we're going to really see the big earnings start coming out. So the rest of this week could look very different than what the beginning of this week looked like, and I think we're just going to have to take that into consideration as we kind of evaluate things. So tomorrow we're going to start off with ADP employment. This is really going to be the first kind of, hard data gauge we get that gives us a sense of, how the employment picture is trending. Obviously, we're looking for the number to come down to 115,000 from 155,000. Then, of course, we're also going to be getting GDP, the first quarter advanced reading. We're looking for it to show an increase of just 0.3% down from 2.4%. I am seeing a lot of forecasts like the Atlanta Fed that are actually suggesting the number is quite negative. So it's something to keep an eye on. We're also looking for the quarterly core PCE numbers to come in at 3.3%, up from 2.6%. We're also going to be getting the employment cost index. We're looking for that to rise by 0.9%, flat with last quarter. Then at 10 a.m., we're going to be getting the month of March PCE number. We're expecting that to show just an increase of 0.1% on the core and 2.6% year over year. That would be down from 0.4 and 2.8. Then on Thursday, we'll be getting the usual initial jobless claim data we get. Then, of course, we'll also be getting the ISM manufacturing survey at 10 a.m. We're looking for a reading of 48. We're looking for the prices paid index to jump to 70.3. Then on Friday, we're going to be getting non-farm payrolls, looking for 130,000 jobs who have been created, down from 228,000. We're looking for an unemployment rate to stay unchanged at 4.2%, average hourly earnings to stay unchanged at 0.3%, and average hourly earnings rising by 3.9% year over year, up from 3.8%, and the work week's expected to remain unchanged at 34.2. We're also going to be getting results from Microsoft and Meta on Wednesday afternoon, and we're going to be getting results from Apple and Amazon Thursday afternoon. And of course, there's always lots of background noise around tariffs swirling. So the markets are going to be getting a lot of information over the next couple of days, and that can play heavily into where things are going to go. And when we look at where currency markets are, there's really not been a lot that's been taking place. We have, moved up to this 115 area, and now we've kind of stalled out right below it, and we're kind of just consolidating now for some time there. When you look at the overall picture of the euro, it looks like you can certainly make a case that we've been trending higher on the momentum, and we have been seeing it really struggle up in this region. Perhaps it's waiting for some sort of economic data to come out to kind of give it an influence, to kind of influence it. And when we sort of look at the pattern, the thing that's interesting to me is it has what looks like a symmetrical shape to it. It almost looks like maybe it wants to return to this lower level here at around 109. Obviously yet to be seen. I mean, just when you look at it from a presentation of, this kind of, head and shoulders looking thing would obviously be a complete looking symmetrical shape if it were to return to there. Not saying it has to, but it just has that, it has that symmetry to it that may be suggesting that that's what happens. But overall, I think over the longer term, at least we're still very much in a position where the euro looks like the trend is higher, especially when you start looking at it more so on a daily chart. There is a lot of momentum still signaling that. And you can also see that there's a little bit of an upward slant and an upward bias to these lows that have been getting put in. Also, you can see right now the 10-day exponential moving average has been serving as support. So as long as the 10-day exponential moving average continues to serve as support, as long as we really stay above this trend line, then it would suggest that we could potentially still see the euro move up and move towards that 115 area we've been looking at, and potentially higher than that. It's going to really depend on how this economic data comes in over the next couple of days. When you look at the pound, you can see we're really kind of hitting up against the upper end of this area at 134. We've been testing it now for a couple of days. The pound actually looks a little bit stronger on the intraday chart and looks like it actually wants to go higher from here. this is a much more bullish looking intraday chart than that of the euro. So that really aligns with what we're seeing more of on the technical chart for the daily trends. And you can clearly see momentum still favors the upside. And if we were to break out on the pound and get above this 134 area, it looks like the next region we could climb to is almost around 137. When we look at the yen also has continued to show signs of further strengthening. Momentum clearly favors further downside, which would suggest more strengthening. Again, when we look more closely at the intraday charts, you can also make a case here that, again, this chart kind of indicates that maybe we want to see some strengthening with a pattern that maybe wants to come down back down to this 140 area. So the euro intraday chart just doesn't go with what we're seeing on the rest of these patterns. And again, when you look at the yen more so on a daily chart, it also looks like there could be potential here to get back down to this 140 area and maybe even break this support level. It's really going to depend on how this data comes in. Clearly, if you start getting weaker U.S. data, that's going to lead to a dollar continuing to weaken. I mean, even if you look at the dollar index, you can see what I mean when you look at patterns. You can sometimes see the symmetry in them. It certainly was the case with the dollar, but more so you can see the dollar's been really unable to get above this 99.5 area. And you can also make a case that this looks similar to what the yen looks like also, and suggesting that maybe the dollar index is heading back towards these lows. So it looks like when we look at everything in totality, it looks much more like the euro, the yen, the pound all look like they're due to continue to strengthen versus the dollar. And even when you look at the dollar index, you certainly get that sense. When we look at oil, that's been a little bit weaker again today, got down to around $60. This is a really key area here because obviously the next major level of support comes around this 58 3/4 region. Clearly, we've broken what looks like a minor uptrend in oil prices, and this really kind of gives us a sense that maybe oil is going to continue to weaken and move back down below this 58 region. It really wouldn't be surprising. These straight line rallies tend to be treated like gaps at times, and that would suggest we kind of come back down and test these lower levels. When we look at gold, you can see here that gold was forming what looked like maybe a descending triangle. That clearly hasn't played out to the downside yet, but it did lead to a breakout to the upside, although this breakout doesn't seem very convincing either when you look at it on a 15-minute chart. When you look at it more so on a daily chart, again, you can see that we're just bouncing off the 10-day exponential moving average now. But clearly, the other thing that clearly stands out is this downtrend that's forming on the RSI, and so clearly you have momentum potentially shifting. Really, the key here is that we need to see gold come back down below this 10-day exponential moving average, and that could set up a break of this 3,300 region. But in the meantime, as long as the 10-day exponential moving average holds, you can probably see gold break out into the upside if it can get over 33 3/4. When we look at the DAX, the DAX has managed to recover just about all of its losses. We had talked in the past about the DAX coming down. We're now back to where we were basically pre-Liberation Day here in the U.S., and we've seen all those losses really get erased. Obviously, Europe's in a little bit of a different situation when it comes to what the expected stimulus plan spending, what the stimulus plans are there. And certainly what we could see here is that now we're at a little bit of a resistance zone. This clearly resulted in the gap getting filled. And again, we're still well above the 10-day exponential moving average and moving away from it. Here's your RSI trend. That clearly broke to the upside. And this looks like there's probably room to continue to rally. Here's your upper Bollinger Band all the way up here at the highs, basically around 23,000. So it looks like there's potential here that if the DAX can get over 22,450, call it, you could probably rally all the way back up to 22,840. Certainly there's nothing from a technical standpoint that really stands in the way, again, once you clear this level at 22,400. When we look at the FTSE, that's also managed to kind of snap back as well, trading well above the 10-day exponential moving averages. Here you can clearly see momentum to the downside broken. And so that means that momentum is now favorable. Again, here's your resistance level right here at 84.68. We've been testing that a couple of times. Again, it looks like probably the FTSE wants to continue to move higher and maybe move back up to this 85,750. When we look at the NASDAQ's managed to rally as well. When you look at your NASDAQ momentum indicator, the RSI is a little bit, you can clearly see, not as favorable as it is on the, let's say, the DAX or on the FTSE. Clearly, the momentum is still kind of trying to maybe make a shift. There is certainly a possibility that the NASDAQ continues to rally. It's going to, like I said, really come down to what the economic data is and what these reports are. I mean, certainly here you were on April 2nd, so we're basically back to where we were on the NASDAQ 100 prior to that day. Almost back to where we were on that day. I mean, there's certainly room for further upside, perhaps to around 19,905. That was clearly an important level going back now for some time. So we're just going to keep an eye on that because I think there's certainly the potential for that to happen. But on the other side as well, I think a lot of it's going to largely depend on how these companies report results and what they have to say. Same thing with the S&P. You can see that on the S&P, there's a little bit more room potentially to go. 5,600 would be the area to look for. I've noted on the daily chart that when you look at it on the intradays, we have what looks like some form of a cup pattern. Maybe we have some sort of rising flag pattern. It really depends on how this kind of plays out. I could make a case, though, from looking at this, that we return all the way to 5,100. So if you want to play it from the bullish side, I think your upside is maybe limited to around 5,600, 5,650. I mean, if you want to try to play it from the bearish side, I could also make an argument that this is a bearish sort of pattern with this rising channel that, if it breaks to the downside, could result really in returning all the way to 5,100. When you look at the Dow has also moved up. You can see this is an important area and zone of resistance around 40,500. When you look at it on the RSI, at least, you can also see that the momentum has been downward, and we're kind of trying to show signs of breaking out above it. But really, you still have to get above this 40,700 area or so. And so really the U.S. indexes, the S&P, the NASDAQ, and the Dow are all sort of at these important inflection points where they're at this point where they could continue to go higher if they can get above these levels of resistance. But again, I think the market's in this position for a reason, and that reason is the market's waiting for what this data looks like over the next couple of days to make a decision on what happens next for it. Anyway, hope you have a great rest of your week, and we'll see you again next. Bye.